Joining me from our nation's capital is Ben Emons, Senior Investment Executive at Strategic Fortune Wealth and CIO and founder at FedWatch Advisors. Ben, it's great to have you on the show this morning. It's been at least several weeks since we last spoke. What has changed and where do we stand today?
Well, I think what's changed, Kirsten, is that there's still more uncertainty than we would like. And the market is trying to figure out now the pivot here from going from uncertainty back to certainty, because that April 2nd date, as everybody now is looking at, we should really get clarity, and it's important to get clarity. I do think we will, but this does depend a bit on what happens with the exact implementation of these tariffs, because that's the news out today of like, are you going to go with the Section 301? It's sort of an investigation. It could take months. Or you're using the Economic Emergency Act and immediately implement them. So I think markets are trying to figure this out. It's not simple, I think, a picture. And I think to your point earlier, you get this consumer confidence data coming out in about an hour. So these are the data points that kind of drive the momentum on a day-to-day basis, because people are reacting to this incoming news on tariffs. It's real time. So I think that's still the stage we're in currently. It makes it hard. It's choppy, but at least it looks like we're kind of recovering from the lows, and people are getting upbeat that ultimately this episode does pass.
Yeah, we've heard traders here at the stock exchange call it a tradable bounce. Of course, we have to see how a lot of these factors play out between the data, the tariffs, and of course, the Fed as well. Ben, you follow rates closely, and we had heard from President Trump even before he took office the second time that he wanted to see rates lower. So amid all of these factors that we're trying to digest, what do you think it all means for rates or borrowing costs?
Yeah, I think at first, though, we would see a relief as it comes to the stock market. It will also lead to somewhat higher yields, because yields have declined on this uncertainty and on flight to safety. But it's also an environment of where people are guessing on where's inflation going to go. We know that tariffs will have an impact. It could be one-time impact, so the word transitory is back. But we also know what transitory can do to interest rates. We could actually be forced to lift interest rates, aggressively if we're behind the curve again. So I think interest rates are sort of in a choppy range here. As much as Trump administration, President Trump wants rates lower, I think that makes sense if indeed inflation continues to decline. There's some uncertainty about inflation. So I think we're going to stay somewhat upward bias on rates for the time being, but we're quite volatile until we have also on the inflation front more clarity.
I do wonder to what extent, Ben, the consumer is watching some of this uncertainty playing out and maybe just prepared for a cautious environment ahead. I ask because we know consumer spending does drive 70% of overall GDP growth.
Yeah, the consumer is stepping off the fear, and we could tell from what's going on in the ports of Long Beach and Los Angeles is one example of massive flow of imports, because everybody's looking for goods that are not tariff right now, and they will change in price likely. So that's, I think, partly why consumer spending is holding up strong, why retail sales haven't really declined significantly. But the indications of the consumer confidence itself shows there's a lot of angst about the effects that this could have on the economy from here, particularly job prospects. And that, I think, will eventually shift the consumer to a much more conservative spending. If that's true, then the economy should slow down a bit. Mm-hmm. And that may be the ultimate outcome from this. We get a further slowdown, temporarily at least, until we really work the tariffs through the economy, and we're getting other forces in place, which investment. Mm-hmm. But I think for the consumer, they don't look at that investment so closely. They look more like, how will these tariffs impact me, and what will this do to my job prospects in particular? Mm-hmm. I think that's really the sentiment at this moment.
We certainly saw a bounce off of last week's low. We did see the S&P 500 actually close in a correction, down 10% from its February high. A correction is a 10% drop from a recent high. But in this case, for the S&P, it was only just about a month ago. For businesses that are adapting to this uncertainty, perhaps it works out in their favor and the tariffs are not as problematic as some of these businesses are planning for. But when businesses need to adapt to the uncertainty, as we heard from companies like FedEx and Nike last week, what kind of impact does that have on the economy and growth?
I think you hit the point on the capital expenditure planning in particular. That's a planning, right? So companies are planning to put money into the economy, and they may be putting that off for a period of time. And just putting it off a few weeks is already impactful, I think, in itself, because those dollars are not coming into the economy as quick enough. And it's also about just the prospect of the economy. You know, if companies stand back and basically hold sort of the fort and say we're not going to do anything, then there's nothing happening really, right? And that slows the momentum of the economy. So I think this is where companies are currently. They may not make immediately drastic measures in terms of cutting costs, because they have to assess the situation themselves too, of like, what's the economy really doing as these tariffs start to come in and start to hit as of April 2nd. Because we're talking about broader here than just on one country like China, which we had in place since February 10th. It's really then how to plan for it from there. So I think we're getting trepidation from companies, basically, particularly capex spending being put on hold, maybe even hiring too. And I think that's really affecting the economy as we speak.
Certainly a lot for us to think through and look at here. Ben, we appreciate you joining the show. That's Ben Emons, Senior Investment Executive at Strategic Fortune Wealth and Chief Investment Officer and Founder at FedWatch Advisors.